Welcome back to Grifter or Gifted. You know the drill by now. We dig deep into the lives of controversial figures, trying to figure out if they're truly changing the world, or just lining their own pockets. Today, we're taking a look at Sam Zell, a real estate tycoon who built an empire by buying up distressed companies and turning them around for a profit. He even called himself a grave dancer, which doesn't exactly scream, you know, altruism.
Yeah, Grave Dancer definitely paints a certain picture, doesn't it? But was he really exploiting misfortune? Or was he a visionary who saw opportunities where others saw only failure?
That's the million-dollar question. And we're going to use a whole bunch of sources to try to answer it. We've got articles on his childhood, his business
Yeah.
deals, his philanthropy, even some glimpses into his, let's just say, colorful
Oh,
personality.
yeah, he was definitely a character.
Yeah.
So, where do we even begin with a guy like Sam Zell?
Let's start at the beginning, like origin story stuff. Sam Zell was born in Chicago in 1941, but his parents were Jewish immigrants who fled Poland just 2 years earlier, literally just before the Nazi invasion.
Wow. Talk about a close call. That must have had a profound impact on his worldview.
Right. Like, you can almost see how that kind of experience might instill a sense of urgency, a need to seize opportunities, because you never know when things might change.
Yeah. And that theme definitely seems to run through his entire life.
Absolutely. And we see that hustler spirit early on. I mean, this guy was buying Playboy magazines in Chicago
Yeah.
and selling them to his classmates in the suburbs for 5 times the price.
When he was just 13.
Classic entrepreneur, supply and demand.
Right.
Yeah,
Totally. But it also shows a real comfort with risk and a focus on profit. That would become hallmarks of his later career.
absolutely. He wasn't afraid to make a buck, even as a teenager.
And that drive continued straight through college. He started managing student housing at the University of Michigan.
Pretty standard college job.
Yeah, but he quickly scaled up, eventually buying and renovating an entire block in Ann Arbor to create his own student housing empire.
That's a pretty big leap from selling magazines.
It is. It shows real ambition and a willingness to bet on himself. And maybe just a touch of ruthlessness.
Yeah, it's starting to sound familiar. By the time he finished law school, he already had a successful real estate business.
So the foundation of his empire was built.
Yeah, but here's where things get interesting. He became known for buying distressed companies, companies on the verge of collapse. He specifically targeted companies with a history of losses because of a tax loophole called net operating loss carryforwards. Can you explain that in a way that doesn't require a CPA license?
Uh-huh. All right, I'll try. Think of it like a board game where you get out-of-jail-free cards for losing rounds. These NOL carry-forwards are kind of like those cards. Companies with past losses can use them to offset future taxes.
Okay, call one.
So Zell realized he could use this to his advantage. He'd buy these struggling companies, use their get-out-of-jail-free cards to avoid paying taxes, and then turn the companies around. It was basically making money while avoiding taxes. All perfectly legal, of course.
So, genius loophole exploitation,
Mm-hmm.
or taking advantage of a system meant to help struggling companies. I mean, I can see how the grifter argument starts to creep in here.
Worry, it's definitely a gray area, but you can't deny his brilliance. He saw an opportunity that others missed.
He also had this famous motto, liquidity equals value. Can
Yeah.
you explain what that means and how it shaped his approach?
Sure, basically. He was obsessed with the ability to buy and sell assets quickly. Like, cash in your hand is more valuable than a valuable painting because you can use the cash immediately. That the painting might take a long time to sell.
Got it.
Zell wanted to create that kind of liquidity in markets that were traditionally illiquid, like real estate.
And that's where his big innovation with REITs comes in,
Exactly.
or real estate investment trusts. Before Zell, owning multiple apartment buildings was a fragmented mom-and-pop business.
Lots of small players. No real scale.
Zell saw an opportunity to consolidate and professionalize the market.
He was a master at seeing the big picture.
He started building national portfolios of apartment buildings and packaging them into these REITs, which allowed everyday investors to buy shares of these REITs on the stock market, just like any other company.
It was a brilliant move. It democratized real estate investing.
And his flagship REIT, Equity Residential, just exploded in value. It debuted on the New York Stock Exchange in 1993 with an $800 million valuation.
Not bad.
But just 20 years later, it was valued at over $30 billion.
That's an insane return.
Yeah, it made him a legend in the real estate world. But this is where things take a bit of a darker turn. We're about to enter the Tribune Company saga. And let's just say, this particular chapter doesn't exactly paint him in a heroic light. but we'll dig into that after a quick break. Okay, so the Tribune Company. This is where things get a little messy.
Yeah, the Tribune deal is
It's a complicated one.
So, in 2007, Zell buys the Tribune Company, which owned some pretty big names in media. The Chicago Tribune, the Los Angeles Times, even a Major League Baseball team.
The Cubs?
Yeah.
Yeah.
But this is at a time when the media industry was already struggling. Oh, yeah. Newspapers were starting to feel the heat from the internet. Advertising revenue was declining.
And on top of that, Zell loads the company up with $13 billion in debt to finance the deal.
Wow. That's a lot of leverage.
It is, and a lot of risk.
Yeah, and some people argue that he basically set the company up for failure from the start.
And then there's the way he structured the buyout.
Right.
He used something called an employee stock ownership plan, or ESOP, to minimize his tax burden. Can you explain what an ESOP is and how it worked in the Tribune deal?
Sure. So basically, an ESOP allows employees to own shares in the company. In this case, Zell used the ESOP to shift ownership to the employees, which, under the tax laws at the time, helped him avoid a massive tax bill.
So on paper, it seemed like a win-win. Employees get ownership, Zell gets a tax break.
Yeah, but then the 2008 recession hit, the media industry went into a tailspin.
Yeah.
And the Tribune, with all that debt, filed for bankruptcy just a year after Zell took over.
So suddenly, that ESOP didn't look so great for the employees.
No, not at all. They were left holding stock in a bankrupt company.
It all kind of fell apart pretty quickly.
Yeah, it did. The Tribune eventually emerged from bankruptcy, but it was a shell of its former self.
And to make matters worse, the IRS later went after Zell, claiming he owed back taxes related to some of the asset sales. That happened during his ownership.
So the grifter accusations really started flying then.
Right. It's hard to see this as anything other than,
well,
a pretty cynical move.
Yeah, it's tough to defend.
So was this just a case of bad timing? Did he misjudge the market that badly? Or was there something more calculated going on?
It's hard to say for sure, but the Tribune deal definitely raises some serious questions about his ethics and his motives.
I mean, it's one thing to be a shrewd businessman, but it's another thing to potentially profit from the misfortune of others.
Right. Especially when those others are the employees, who are now out of a job.
This is where the whole grifter or gifted question gets really hard to answer.
It does. On the one hand, you have these incredible successes, like Equity Residential, that suggests real vision and innovation.
But then you have these moves, like the Tribune deal. That just seemed kind of predatory.
It's a tough one.
And then you add in his personality.
Oh, yeah.
Which was, let's just say, not exactly known for its subtlety.
He was known for being blunt and colorful.
And sometimes offensive.
Yeah, especially towards women.
I mean, remember his business card?
The one that said, "Am I being too subtle?"
Yeah. It was a booklet filled with his favorite Samisms.
Which is pretty telling.
Right. Like one of them was, "Unless you're the lead dog, the scenery never changes."
That's classic Zell. Always in control, always leading the pack.
And another one was, "We suffer from knowing the numbers."
Which sounds kind of smart at first, but it almost implies that empathy and human considerations were secondary to the bottom line.
Yeah. It's a very data-driven, analytical way of looking at the world.
Which can be both a strength and a weakness.
Right. But then you have his philanthropy, which seems to contradict that whole numbers-only approach.
Yeah.
He and his wife, Helen, were major donors to the arts, education, and Jewish organizations in Chicago.
They gave millions to the Chicago Symphony Orchestra.
They even endowed the music director position.
It was a pretty big deal.
They also supported the Museum of Contemporary Art Chicago, the Steppenwolf Theater, and several Jewish schools.
And they were big contributors to early childhood education programs.
So on the surface, it seems like he believed in giving back and creating opportunities for others.
It's a very different side of him.
But it's hard to reconcile that with some of his business dealings.
Yeah.
That arguably contributed to widening the wealth gap.
It's a real contradiction.
So was his philanthropy driven by genuine altruism?
Or was it more about reputation management?
Was he trying to soften his image?
Or maybe he saw it as another investment opportunity.
Applying his business savvy to the world of philanthropy.
It's hard to know for sure.
Yeah. It's just another layer of complexity in the already complex life of Sam Zell. It's almost like he had these two sides. The shrewd businessman and the generous philanthropist. And they were constantly, I don't know, interacting.
Yeah, it's an interesting dynamic.
Do you think his business sense influenced his approach to giving?
Oh, absolutely. He was very hands-on with the organizations he supported.
Really?
Yeah, he wanted to see results, just like in his
That
businesses.
makes sense, given his personality.
Right. He wasn't just writing checks and walking
It
away.
was almost like he was applying his liquidity equals value philosophy to charity,
Yeah, he wanted his giving to be impactful.
to generate a return, even if it wasn't a financial one.
Exactly. Some people criticized him for being too controlling, but others admired his commitment.
And his focus on early childhood education is interesting.
It's just a belief in giving kids a fair start.
Right. But then again, some of his business practices maybe didn't exactly create a level playing field.
It's true, there's a tension there.
It's like he was trying to fix the system while also benefiting from its flaws.
It's complicated.
That's Sam Zell in a nutshell.
Yeah.
A walking contradiction. Brilliant. Ruthless. Generous.
All of the above.
So, here we are at the end of our deep dive.
Yeah.
And the question remains, grifter or gifted?
What do you think?
Honestly, I'm not sure. I can see both sides.
Me too.
I think that's the takeaway here. People are complex.
They're rarely just one thing or the other.
Sam Zell was a force of nature.
He left a mark on the world, for better or worse.
And his story reminds us that, even in the world of business,
Right.
where numbers often rule, there's always a human element.
Always.
So, thanks for joining us on Grifter or Gifted. We'll be back next time with another deep dive into the life of a polarizing figure. Until then, keep questioning, keep exploring, and keep those grifter or gifted debates going.